Welcome back. Let's get a corporate conversation going now. Rategain Travel Technologies. They reported their numbers last week, and Q2 was a very strong quarter. The company has reported a revenue growth of 9.4% quarter-on-quarter, 88.4% on a year-on-year basis. Margins too have seen a sharp expansion. Year-on-year, margins have gone up from 14% to 19.7%, and even on a sequential basis, we are staring at a margin expansion. In fact, the company went ahead and upped its full-year revenue guidance to 65% versus their earlier guidance of 55 to 58% on the top line, and the margin guidance too has been raised to 19% versus 17% for FY24. Bhanu Chopra, the Chairman and Managing Director of Rategain Travel, is with us now on the show. Bhanu, morning. This is Reema here. Is your FY24 guidance conservative? You're talking about a 65% full-year revenue growth, when in the first half of the year, you've had a 77-78% kind of growth, and H2 for you is typically even stronger. So is there upside to your full-year revenue guidance, and why didn't you look at giving a higher number?
Yeah, hi, Reema, and thanks for having me on the show. So actually, if you look at our H1 numbers, it has the inorganic portion as well. And in H2, some of that inorganic actually goes away because we reported the Adara numbers in the consolidated revenues in Q4. So it's really the base effect as a result of which, artificially it feels like we're reporting a lower growth guidance, but it's the inorganic effect that goes away. So really, if you look at the organic numbers, H2 should come out to be stronger than H1.
So can you tell us what is the organic FY24 revenue growth number? And then if you could break it out, what have you done organically in H1 and what could H2 look like?
Yeah, so the H1, as you've seen, we've grown 85%, out of which 35% is organic, and the balance is inorganic. And what we've historically maintained since the time of the IPO is that the company is going to, do north of 30% organic growth. And we've actually over-delivered on that. And our margin expansion was supposed to be 200 to 300 basis points. So at the time of IPO, we said we'll go from 8-9% to 20% in 5 years. So we far ahead on that guidance also. We are already coming to about 19% margin, for the full year. Now, your question about H2 also, we expect again north of that 30% organic growth. And, as I've stated previously, M&A is a big part of our strategic growth plan. So, there are deals that we are evaluating and, there might be a little bit of that as well that might go into Q4 depending on where we land up.
Okay, got that. Bhanu, thanks for joining us. This is Pavitra. Since you were speaking about the margins, I believe for FY24, your margin expectation is around 19%. A, does that still hold? And also, I think you'd spoken about steady-state margins of 20 to 25%. When do you think you can get to the 25%?
Yeah, so if you actually look at our Q2 results, we are closer to that 20% number again, far exceeding the fiscal year guidance that we had guided for at the beginning of the year. So I feel pretty good about, the 19% because, last quarter came out stronger than that. And, as I mentioned, H2 is usually better and that operating leverage is playing out. We have a very, very large deal that we announced a couple of quarters ago. It was one of our biggest deals that we have done in the history of the company. That is actually getting monetized in this quarter. And the full monetization will occur in Q4. And it has a huge amount of operating leverage. So I feel very, very comfortable in saying that we should be exceeding, those targets that we have said about 19%. On your question about, going forward, can we get to that 20 to 25%? So something that I've said in our quarterly earnings also is, look, this business is actually north of 30% margin. but we continue to reinvest in building more capabilities, expanding our sales and marketing infrastructure. We were, really building out in the Middle East. We got impaneled by NEOM, the big Saudi project that's being launched, and which has the line as well. And all the hotels that come up will be signing up for the Rategain distribution platform. We're expanding our presence in Latin America as well. So as we continue to build out growth, because we've not even, we're just scratching the surface. I mean, there is a potential to make this company $1 billion in revenue. We are at about 120 million. So we want to continue to reinvest, and at scale. The beauty of this model is that, there's so much operating leverage that we will continue to see expansion of margin. So net, I think, going forward, it's fair to expect about 20 to 25% as we sort of go through our investment cycles. We'll continue to maintain that range, and with sort of having 20% as our floor.
Got it. So 20% will be the floor on the margins going ahead. Bhanu, you said that you're hopeful of completing an acquisition in Q2. You're in talks with several M&A companies. The ones that you're in talks with, can you give us an idea of the size? How much can it contribute next year? We understand that this is binary. There is a binary element attached to these stocks. But, based on your conversations right now, if they do fructify, then what is the inorganic contribution that we're looking at?
Yeah, so I can't disclose much at this point, but I will say that, we run a programmatic M&A program. We have we continuously talk to companies that sort of fit our strategic roadmap. And we do have a couple of candidates in the pipeline that are of a huge amount of interest to us. So one is, similar kind of revenue size to what we have done in the past. And one company is slightly larger. And, it can be sort of a game changer event for us. But at this point, that's all I can say.
Okay, we're going to wait by for that announcement. Bhanu, just one final question. If you can talk about just Adara's revenues, what do you think you can end the year with? And you're currently at around 20% in terms of margin over there as well. What do you expect from just Adara?
So, we guided at the beginning of the fiscal, we were at 27 million. We guided for about 32 million, 15% type growth, but we're far exceeding those expectations. So we are currently run rating at about 10 million. So I'm pretty confident that we will come north of 40 million in that business alone, $40 million.
Okay. Thank you, Bhanu, for joining in. That's Rategain Travel Tech saying this company's margins are actually in excess of about 30%. It's just that they're investing back into the company, which is why their margins are lower. But going ahead, 20 to 25% is something that they perhaps could be looking at. And this is a company which has the potential to be a $1 billion company. They've anyway set out a target that they will double their revenues in 3 years. Yeah. So currently at $120 million, doubling it will get them to about $360 million. And from there, they need to, triple it.
Move, yeah.
So to get to that $1 billion mark. But, clearly that's the aspiration.
Stock has also done exceedingly well, right? I mean, in just 1 year, it's up 140%. So it's done very well. Today also, of course, the stock is up around
It's
6%.
Enjoying the full tailwind of the travel recovery, right? Big beneficiary of that. Get into a break. On the other side, we'll discuss market fundamentals. Devang Mehta of Spark Private Wealth joins in on the other side.